I've compared the markets to a church with a casino attached, and people can move between the church and casino, and I would say there are more people in the church and more people in the casino, but the casino's gotten very attractive to people. You know, if you're buying one-day options or selling them, I mean, that is. That's not investing, it's not speculating, it's gambling, you know, just totally. There's nobody that can explain why they're buying an option for one day, unless they maybe the fellow that you know, made the $400 and some thousand from knowing when we were going into Venezuela can do it. But I mean, that's ridiculous. And the quantity of those things is just incredible. So we've never had people in a more gambling mood than now. But that doesn't mean that investing is terrible. It does mean that that prices for an awful lot of things will look very silly.
Warren Buffett once compared the market to a church with a casino attached. For most of market history, the church was fuller. That balance has shifted. In 2016, zero-day options contracts that expire the same day. They're made up just 5% of S&P 500 options volume. By the end of 2023, that figure had climbed to roughly half of all activity. In 2025, zero DTE options averaged 14 million contracts per day, up 41% year over year. The notional value of options traded averaged $4 trillion per day. Think about that number, $4 trillion every trading day in instruments that don't exist by the time markets close. By Q3 2025, more than 57% of all SPX index options traded were zero-day contracts. Buffett called one-day options gambling. The data suggests the casino has become the main building. Now, some will say this is sophisticated risk management, and for a small number of institutional desks, it is. But here's what the numbers actually show about outcomes. A SIBO backtest of a simple zero DTE strategy, buying a straddle at market open and holding to close, produced a median daily payout of negative $3.28. The average was slightly positive. The median was a loss. That asymmetry has a name. It's called the house edge. When the median retail participant loses on the median day, that's not investing. That's not even speculating. Buffett used a more accurate word. While the casino floor has been filling up, something has been happening quietly in the church. From 2022 to 2024, central banks around the world purchased over 3,200 tons of gold, more than double what they bought in the 3 years prior. In 2022 alone, 1,082 tons. In 2023, 1,037 tons. 3 consecutive years above 1,000 tons, figures not seen in modern monetary history. These are not retail traders chasing momentum. These are sovereign institutions, Poland, China, India, Turkey, making multi-decade reserve decisions. The structural argument being made by these institutions is straightforward. Gold has no counterparty risk. It cannot be printed, devalued, or frozen by sanctions. When the institutions managing national balance sheets move this deliberately, they are pricing in a risk that doesn't show up in a one-day options contract. Markets are confirming the thesis. The gold price set 53 new all-time highs during 2025. The average annual price came in at over $3,400 per ounce, a 44% increase year over year. Total gold demand exceeded 5,000 tons for the first time in recorded history. JP Morgan's commodities desk is projecting gold toward $5,000 per ounce by Q4 2026, with $6,000 per ounce as a longer-term possibility. These aren't fringe forecasts. These are the numbers coming from the largest bank in the United States. Buffett said the casino has gotten very attractive. He's right. He also said, this doesn't mean investing is terrible. It means, and this is the part worth sitting with, that the prices of an awful lot of things will one day look very silly. The institutions buying gold aren't making a short-term bet. They're making a statement about what holds value when the daily contracts have all expired and the casino has closed for the night. That's the church side of the building, and it's worth understanding which side you're standing in. If this kind of analysis is useful to you, subscribe. We cover the metals market the way it deserves, without the noise.